Power 98.7, progressively elevating the conversation. Now, we're talking.
20 minutes after 7 on the Power Business. Now we enter the deal room where we track the latest mergers, acquisitions and investment activity shaping South Africa and the rest of the continent. We have Thami Netha, who's the CEO at Niselow Capital, in studio with us. Good evening, Thami. Fantastic to have you in studio.
Thank you for having me.
Great. Let's start with South 32. There's been some news on their company today announcing the exit from the operation in Colombia. What does this disinvestment mean for the broader nickel environment?
Well, I think it speaks to oversupply. I think there's a large amount of nickel coming in from Indonesia as well. So they're looking at, they're trying to streamline their operations to more high value or high margin metals like zinc to make sure that their balance sheet is healthy. I think it's also a view of the quality of investment opportunities that exist. Unfortunately, if you are a commodity producer or miner, you're a price taker. So the price of commodities that you're selling is set outside of your realm, whereas other people get to set the price of their products within themselves. So I think that's a major difficulty. So projects can be priced out merely on the commodity pricing at that point in time, with certain supply and demand dynamics.
And if we just look at South African investment, how does that affect them?
Nickel. So your view on nickel, I think we're going to have to hold steady for a while. I think it's going to be difficult to, because we have a couple of issues working against us. One is we're on the southern tip of the world, so logistics is always going to be a complex element for ourselves. Internally, we're struggling as well with our logistics issues around Transnet and the like. So I think it's going to be, if you're not in high value or high margin minerals, I think you're going to be in a lot of trouble going forward.
We'll talk about minerals and the attraction in West Africa in just a moment, but still staying locally, construction engineering company Stefanati Stocks has restructured its exit from Mozambique and Mauritius. What are some of the reasons behind this decision?
Yeah, quality of the book, right? So the quality of opportunities that would happen in Mozambique and other regions, generally speaking, is not simple. So you've got to, as a business, look at where the book is and where the quality of your book is. So if you are not able to produce quality margins, construction generally is a low margin business. So you have to be operationally very sound. And if that is now difficult to do, especially in certain jurisdictions, you'd rather exit that book to other people who can manufacture quality opportunities and margins out of it, especially when the exchange rates issues are there as well.
I saw this deal and I was quite interested in it. The property share transaction between HCI and the Southern African Clothing and Textile Workers Union. How significant is this? And one of the properties that is going is
Gallagher Estate.
Yes, Gallagher Estate, where a lot of trade unions and the ANC, a lot of trade unions meet.
I think it's a restructuring of the portfolio. So I think as a trade union, especially your investment holdings, you've got to restructure the portfolio to make sure, one, you have liquidity, two, you have the dividend flow to assist in making sure that the trade union stays afloat. You can't simply rely on, call it the membership fees that come in from your members. That's not a sustainable model. So they've gone the investment model, and in this model, they now have exited some of these assets for 550 million plus 144 million in stock, HCI stock. So they're going to be a major shareholder, significant shareholder in HCI, which is going to bode well for them for their restructuring. They now have got a bunch of capital as well, which they can allocate to other projects. So I think it's a smart move to be in cash and to be able to look at opportunities that suit them going forward.
Right. They're going liquid. And Egypt, so let's go to the continent now with Alameda Healthcare securing $190 million minority investment from Development Partners International. And what does this signal to you about private healthcare in North Africa?
I think it's two things. Firstly, it speaks to the private equity appetite for healthcare. I think Egypt is beginning to attract a lot of private equity attention and size of market, and a lot of the businesses being family owned.
Huge size of market.
Yeah, and a lot of the business are family owned, so there's a lot of opportunity there for a private equity player who understands the region. I think that's important. Also speaks to the general appetite for African healthcare off the back of growing populations, urbanization, and the demand side pushing rather than anything else.
Right, in a deal between Coca-Cola Beverages Africa and Equatorial Coca-Cola Bottling, how does that reflect in a soft drinks market?
Well, I think the acquisition is almost a consolidation. It's putting Ghana in the position to have controlled the bottling market, or the Equatorial bottling business to have controlled the Ghana bottling market. I think it's potentially lining up towards an IPO. Bottling is a very high margin, healthy business, and it allows a lot of, I think, capital to flow to you as an owner. So I think we might be hearing rumors of an IPO in that area soon.
Okay, we'll watch out for that. Let's go to Nigeria now. And the federal government there has actually announced that tomorrow will be a public holiday after their former president, Muhammadu Buhari, passed away. But financial services company Guarantee Trust Holding recently listed on the London Stock Exchange and launching an equity raise. I found this very interesting because it looks like this is a signal for investor confidence in the Nigerian market.
Yeah, so I think there's two things to be said to that. One, I think there's a lot of very healthy indigenous banks in Nigeria. But Nigeria is a different market from a lot of sort of Anglo-Saxon markets. They've got a lot of people. They've got a lot of mobile transfers. The central bank is really staying on top of things, managing inflation, managing the valuation of the naira. So as a result, they've also set up some recapitalization thresholds that need to be met sometime next year. So this $105 million is a great move. I think it additionally speaks to there's a lot of investors that are willing to put capital to West African banking. We've got a lot of those type of investors in South African banking as well. But this is a signal about where financial services potentially is going on our side of the world.
I mean, Nigeria's market is just set to grow and explode over the next 70 years.
It's huge. And having been there a few times, I can tell you there's a lot that happens there. And they've managed to get products and financial services to people through mobile phones. So the mobile phone penetration has enabled you to be able to transact with the most rural person around, sending money, purchasing goods, moving goods. So I think the next phase of Nigeria's sort of evolution will be around supply chain and logistics. I think the firms that crack that will have done well building off the base of mobile money and digital platforms.
But still with the primary sector, Australian-based Chariot Corporation, which is a mineral exploration company, is acquiring lithium projects in Nigeria. And it looks like international firms are targeting critical minerals in Nigeria. I saw an article the other day that the amount of demand for minerals in Africa is just going to skyrocket over the next 10 years.
Yeah, I think first at the top of it, I think is the conflicts happening in key areas. So, for example, Ukraine was a huge wheat supplier to the globe. So with them going through this conflict, there's obviously going to be a decline in wheat production. So there's a lot of regions that are having this pressure. And the global geopolitics is then impacting supply and demand factors. We have the strategic advantage as a continent in general, and maybe sort of the mineral resource rich, more stable environments specifically. I think we have a strategic advantage right now to actually get our supply chains right and start supplying the globe with critical minerals. I think the labor and structural costs of the same sort of thing in Europe is very difficult. So I think the bigger global countries are beginning to demand products from alternative sources, which didn't happen previously. So a place like India, a place like China, their demand for certain products is going to change global supply chain call it logistics. So I think for Nigeria, it's a brilliant move to be able to attract capital, given what they have been deemed to be and the history that has come about and how people view Nigeria in terms of risk. Some of it, I think, is overbearing. But it's also a signal to us here in South Africa that we need to look at our strategic minerals and how we engage the globe with what's available here. The more red tape, the harder it is to do business, the more people will go elsewhere. And that then makes us lose what we have as a strategic advantage, that we have experienced, knowledgeable miners.
All right, we'd better take advantage of that. Thanks very much. That's Thami, the CEO at Niselow Capital. Appreciate your time.